Alright boys, good morning. Today is Thursday and we are doing our chart breakdown. So we are currently running in this short re-entry position on gold. And that's beautiful, right? As mentioned several times yesterday, prior to having the FOMC news happen, we had price grab liquidity, and that why there is the standard liquidity grab. I mean, you cannot you cannot you cannot indicate a liquidity grab better than this movement right here, right? So we had several consolidation weeks for several hours. This is the 1 hour chart right here. So we had the accumulation area being formed just prior to having news tab, and then a few hours before having the news we had the liquidity grab, right, stopping all of those positions out, including these gold positions we were in 24 hours prior to having this happen, before having the data release. Alright, strong flush, precisely as we were anticipating. And this right here is the definition of a liquidity grab, right? Ranging consolidation market liquidity grab before the well anticipated downwards move, right? So we got stopped out by just a few pips before having the flush. Now we were engaged in this setup 24 hours prior to having any of this happen, right? And as you can see, for almost 24 hours we had price consolidate within our entry level, right? And then price stopped us out, grab liquidity before doing precisely what we were anticipating, tapping what would have been the target to perfection, right? So that's gold, right? Then today we have executed a continuation position, of course, right? We are overall anticipating the dollar to continue strengthening because of the data release that we had yesterday. And so overall this trade has actually a lot more potential to it. We might actually see a new higher time frame lower low being formed, and in that case we're looking at a massive gainer. Yes, yet we are going for the conservative approach. We are taking our 1 to 2, and we simply move on to the next one. Right, this is a pretty strong relevant minor AOI right there, which was used both as a support level and as a resistance multiple times before. And so we are just choosing the best approach, aiming for yesterday's low and for this main AOI right here, in case price uses it as another support, potentially grabbing some more liquidity, before having the flash. Yeah, beautiful price action. Let's quickly go over it. Weekly time frame is bearish. Price had formed that double top after a very long amount of time in which price was moving to the upside quite strongly. Then we also had last week close as a doji with a big lower wick, looking perfect for a fill-in. Price is now tapping into the weekly MA precisely as we speak, right? Is right there on that level. A break below would be a very good indication that we might have a continuation move, right? Then the daily time frame also looks sublime. Price had formed a new lower low which originated from this very beautiful head and shoulders pattern. As you can see, the neckline of it was used as a very strong support level, right? Dynamic support level, diagonal support level, before having price break below it with this big bearish engulfing, forming a new lower low. Then we had the lower high being formed, doji rejection of that strong relevant minor AY. And yesterday we had the data release, once again the FOMC. Kevin Walsh has a very hawkish approach, right? And so the dollar will strengthen because of it, right? And we have this big massive bearish engulfing being formed yesterday. Beautiful evening star formation, beautiful rejection, and now we are anticipating once again continuations, right? Beautiful price action. 4 hour time frame had also shifted structure to bearish yesterday. Massive bearish engulfing confirming this beautiful double top formation. Price had then pulled back during the night, forming its lower high, retest and rejection of the previous structure point of the neckline of the double top. Beautiful doji being formed precisely on it. and then we had our entry signal being provided. We executed another trade on the lower high, anticipating a new lower low. That applies to both the higher time frames and the lower time frames. Very beautiful price action. Our entry signal was composed. 1 hour looks beautiful as well, right? Support being used as resistance, lower low, lower high. It doesn't get any more cleaner than this. Our entry signal was composed by this 15-minute shift of structure, double tap. We had price from a minor lower high, went right there after that bearish engulfing. Price from the minor lower high before taking off to the downside strongly, right? Here is just a stunning position overall, both from a technical perspective and from a fundamental perspective. And we actually had the agreement in between the United States and Iran being signed, right? So we have officially entered in a 60-day negotiation window in between the United States and Iran, and so we finally have that whole headline in the Middle East scenario come to an end, right? We can now finally trade our analysis. We can now finally trade the main fundamental factors moving price, and we will no longer have our analysis and our trades being compromised by this Middle East conflict, right? It was signed yesterday in France. I mean, those are details that are not important. I just happen to they were tied to the source from which I got this this information, right? And so this is gold. We are currently running in solid profits. Price is approaching our fixed 1 to 2 to your ratio, and that's beautiful. Now let's quickly go over AUD USD as well. We had a position placed on this trade yesterday. We broke it down yesterday. We are very much anticipating this liquidity grab, yet we did not wait for it, right? We simply executed, anticipating a beginning of the movement before actually having the data release. We often see that happen. On the contrary, we see this happen, right? Strong liquidity, moderate liquidity. It wasn't like a strong spike, right? It was more like a steady grind, slow stop out before the news release, right? We got stopped out by 1 pip, not even 2 pips, by 1 pip before, just minutes before having the data release. And then when we had the data release, we had price do exactly what we were anticipating. Now we took a loss on the new account, and on the old account we took a burner play, right? We simply went in max sizes, $5 per lot, trading the news volatility, and it resulted in a massive P&L result, right, on a $10,000 account. Yet I'm not glad about that. I'm not even gonna mention the amount, because that's not the way to go. I was just trying to take advantage of this move we were very much anticipating, and it paid off. Yet we risked a lot more than we should have on it, right? And so I'm not getting into the details of that, but that's not the behavior you want to be reinforcing. Yes, you missed out on the move. Yes, you got stopped out by a pip, but you must strictly reinforce your risk management rules, right? That's the only way to become profitable. That's the only way to not compromise yourself. Now, there will be a point in time in which you will start scaling, right? But we have yet to reach that point. So 1% per trade, fixed risk is the way to go for now. Yeah, beautiful play as well. We went over the technicals yesterday. Overall lower high, and now price is heading for a new lower low, right? Continuations, and there is a lot more potential to this actually, right? Yeah, overall beautiful, and we will see what the next week have to bring. But I'm seeing some beautiful scenarios lining up, and we finally have this Middle East conflict come to an end, which is amazing, right? Cool. That's gonna do it for now. I'm about to get physical. I'm about to do them push-ups, and then send some more outreach emails for the AI agency, and that's gonna do it for today, right? The process keeps on going, and we keep on striving for greatness, right? So always remember, keep on striving for greatness, brother, because you are meant for it and absolutely nothing less. Let's go.